This is Nacho's Crypto Signals. This intro video is to explain what this channel is about. Um, Very simple introduction. So, what we want to do is employ a simple trading strategy that maximizes return and minimizes risk. So, what does that mean? What does it mean to minimize risk? So, if you invest $1 and you have the possibility of profiting $10, that is a small investment for a larger return. Otherwise, if you have to invest $10 and you have the possibility of profiting $1, that would be a 10% return. You are risking more money to make a smaller amount of money back. So, what we want to do is have outsized returns, invest a small amount of money, and make something much larger back. And the amount of money that we risk be a lot smaller than the amount of money that we could make in return. Um, so there's a couple of operating theses, basically rules about how the crypto market works. The first one is that Bitcoin is the star of the show. Bitcoin is the leader, and all of the other coins, Ethereum, Tron, Gala, Dot, everything else, they all follow Bitcoin. Bitcoin moves first, and everybody else, all these other coins, they're watching to see what Bitcoin does, and they react to Bitcoin's movements, right? So that's rule number one. Bitcoin is the star. So who's the star? If you said Madonna, that would be incorrect. Bitcoin is the star. Our second operating thesis here is that the market works in, oh, I can show you as well that Bitcoin, in fact, does lead and everybody else follows. So for looking at cryptocurrency market prices, I use CoinGecko.com. There's another good site called CoinMarketCap.com. They're great as well. I recommend CoinGecko.com. So you can see Bitcoin's movements in the last 7 days right here. And you can see we had a little spike up, then it just went sideways, a little dip. After the dip, it went above where it's been going sideways, and now it seems to be going up. Now, if we look at Ethereum right below it, what do we see? It went up a little bit, just like Bitcoin did. Then it went sideways, just like Bitcoin did. And then it did this U right here, dipping down and coming back up, and then going back up, emulating pretty much exactly what Bitcoin did. Tether is a stable coin. Stable coins are pegged to the dollar, so they always try to maintain a $1 value. They're not going to follow Bitcoin movement. They're just going to stay at a dollar. So we discount this one basically. BNB, that's the Binance coin. What did it do? It upticked here, just like Bitcoin did. Maybe not as big, but it's a version of the same movement. It went straight and then it did the U, and now it's going sideways. Um, and if you look over and over again, XRP dipped down. It didn't come back up like Bitcoin did, but it's a version of what Bitcoin did. It followed what Bitcoin did. Lido, same thing. Spike up, straight, U down. Cardano spiked up, kind of went down, and then had this dip and is going straight. And if we look over and over again, some people get surprised by this. They look at it and they think, wow, there's all this crazy manipulation, and there could be. But this is just a general rule of the cryptocurrency market. Bitcoin is the star, and everybody else follows. Okay, so our second operating thesis, and this very important one, is that the market moves in cycles, and these cycles last 4 years. Okay? And these cycles, they are a repeatable pattern that at least I use to trade. Something that is easy to think about and something that is easier to follow rather than trying to guess what Bitcoin's going to do tomorrow or on a shorter time scale. It's very difficult to know on a short-term time scale what's going to happen. It's random. Crazy things happen. Governments make things illegal. Companies suddenly adopt things and buy billions of dollars of a cryptocurrency. So day to day, it's very crazy, very hard to make any logic out of it. But if you zoom out and you look at it from years long perspective, you get these patterns. So what we're looking at here on this chart is Bitcoin USD. That is the value of Bitcoin denominated in US dollars. Bitcoin basically came out in 2009, and this chart starts in 2009 at zero, Bitcoin being $0. Um, Another thing that's kind of important about this chart, I'll move myself out of the way here, is that it's a logarithmic chart. So if you come on TradingView and you look at it raw, it will probably be on a linear scale like this, where on the Y scale, every increment up is the same increment. So here we're going up by 2,000 from zero, or I mean, it goes up by 4,000, 0 to 4,000, 4,000 to 8,000, 8,000 to 12,000. The problem with this is that Bitcoin spent a long time just being worth cents, being worth dollars, tens of dollars, and all of the price movement in Bitcoin's earlier time gets erased because if your measurement is from 0 to 4,000, you're not going to see Bitcoin's movements when it went from $1 to $10, even though that's a 10x move, that's a huge move. It gets obfuscated by the time scale. So logarithmic goes up not incrementally, but you can think of it as doubling or tripling. So 2 cents to 5 cents, 5 cents to 12 cents. Eventually, we get to bigger numbers, 200 to 500, all the way up 45,000 to 115,000. So the more it goes up, the much higher that the number gets. And this allows us to see the price movements in when it was a very low price, as well as price movements when it's at a very high price. Okay, so back to the 4 year cycle. The way that we look at this is we say from the very bottom of the previous cycle to the bottom of the next cycle, it's about 4 years. It's not exactly 4 years, but taking a look at 2011 to 2015, okay, we're looking at 4 years, right? 45 bars. Each one of these bars is 1 month. That is about 4 years, give or take a half a year, a quarter of a year, or something. Um, let's look at the next cycle from the bottom in 2015 to the bottom in 2019, I believe that is. 55 bars. I might have gone a bit over. It might actually be this other bottom here, right? 41 bars, about 4 years. So every 4 years, Bitcoin goes from one bottom to another bottom. But if you can see, the next bottom is much higher than the previous bottom. And in fact, Bitcoin never goes back to the previous cycle's bottom. Never has. So we depend on these patterns that keep playing out in order to make investment decisions. And this is not financial advice, so you can't sue me if you lose money. I'm just letting you know how I look at the market, what kind of things I'm looking at, so that you can make your own decisions. So even if you buy Bitcoin at the worst possible time, if you wait long enough, Bitcoin will save you, right? So if you bought at the very peak of the 2011 cycle, right up here, it went all the way up to a whole $31 for one Bitcoin. The If you waited about 4 years until the next market cycle peak, you actually made a 3,600% return. That's about a 36x return. Again, if you bought at the top peak in 2013, the next peak took you up to 20,000. If we do that again, if you bought at the worst time to buy in 2017, you just spent years watching your money go down, just going down and down. Eventually, if you wait long enough, Bitcoin climbs back up. And again, it never goes back to the previous low, right? So this low, Bitcoin has never gone back there again, right? This low at $170 has never gone back to $170. Some people are calling for this market cycle to go back down below 3,000, which was the 2019 bottom, and it has not gone down. Some say that we've already hit the bottom at 16,000. So, as you can see, even if you buy at the very worst time, all is not lost. Okay, now, okay, so this other point is that to actually maximize your returns, Bitcoin is not the best asset. Bitcoin is the best asset for wealth preservation. It's the most trusted, most secure, most well known, uh, safest blockchain that there is. But it's already so big in market cap that it is hard for it to grow a lot. So, for example, let's say you have a company and your company is worth $10, right? How much effort, how much possibility is there for your company to double in size? Well, you just need another $10 to double that company in size. $10 is pretty easy to come by. If your company is worth $10 trillion, okay, how much effort would you need to double the size of a $10 trillion company? You would need another $10 trillion. That's not easy to come by. So the larger that a coin is, the harder it is to get outsized returns from it. And if we look at the market cap, which is the entire value of a coin, Bitcoin is worth $512 billion. So if you want to double your money on Bitcoin, investing today, you would have to wait for another $500 billion to be invested into Bitcoin. However, if we come down the chart, let's grab a random coin here. Sui is kind of popular right now. The market cap, the entire value of Sui is $346 million. Now, that may sound like a lot of money, but in the cryptocurrency space, that comes and goes, right? We just saw Bitcoin's worth 500 billion. Ethereum, I think, is worth around 200 billion. We could go look at it. But coming across $346 million to double the size of your coin, that's actually not that hard. Much easier than doubling your money with Bitcoin. So if you, uh, there's different approaches that you can take. Wealth preservation, you have money and you want to keep it safe, you want it to grow a little bit, but you're not trying to risk it. You're not trying to possibly lose a lot more of it on a smaller coin that could go to zero that nobody knows about. You want it in a safe spot where it's not going to go to zero. Bitcoin is a much better alternative. But if you want to make outsized returns, you want to multiply your investment by a lot, then you should look at these smaller tokens. Um, so that's about it. We want to get outsized returns. At least what I'm looking for is a high risk, high reward coin. So it's going to be a smaller token. We have to invest in the right token, some tokens, they're just jokes. They're just meme coins. Some tokens, they have a plethora of themes. There's artificial intelligence coins, there's payment coins, there's gaming coins, there's anything that you can think of pretty much, there's a cryptocurrency for it. So we want to zero in on some uh, good quality projects, serious coins. We want to invest them into them at the correct time, and then we want to sell also at the correct time. So it would look something like, again, all the other coins follow Bitcoin. So if these other coins are following this pattern here of kind of surfing these waves up, if you think about these waves, you want to buy close to the bottom, and it's impossible to tell the exact very bottom, but somewhere around the bottom, and then sell somewhere around the top. Again, it's impossible to tell the very top, but even if you manage to land somewhere in between those, so let's not calculate from the very bottom. Let's say you invest here, and let's say you also don't get to the very tippy top up here, but you sell somewhere a little safer here. That's a 2,000% return. That's a 20x. So you invest $1,000, you get $20,000 back. Again, back to our example of risking little to make a lot, right? Let's look at an example in the next cycle. So calculating not from the very bottom and not making it to the very top, that's a 500% return. That's a 5 times on your money. And if you do somehow, get the timing really correct, like let's get the bottom of this candle to the top of this candle, um, right? The returns grow. And so, in conclusion, right, this channel is for um, learning about the cryptocurrency market, thinking about some opportunities to get in at a lower time frame and selling at a higher time frame on a serious coin, thereby minimizing risk and maximizing return, and also to share our experiences and what people are doing and how we're thinking about the market. Um, so, welcome, and I hope that this channel is useful to you.